This video will help you understand if your Roth 401k to Roth IRA rollover will be tax-free when you ultimately go to make withdrawals. If you don't know who I am, my name is Chris Dime. I'm a financial planner out of Edmonds, Washington, and I specialize in working with folks to and through retirement. Now, philosophically, I'm a huge advocate of consolidating like accounts. Pre-tax 401ks with pre-tax IRAs, Roth 401ks and Roth IRAs, individual joint accounts, etc. I like all that stuff getting combined. I think from an Occam's razor standpoint, I'm not a big fan of multiplying entities unnecessarily. That being said, of course, there are exceptions to that rule, and in one exception would be moving money from a Roth 401k to a Roth IRA without doing your due diligence ahead of time. So in this video, I'll explain some of the due diligence that you should be doing if you're nearing retirement and looking to do a Roth 401k or 403b rollover to a Roth IRA. So let's jump in. Now, if you watched my previous video on 401k to 401k or 401k to IRA rollovers and some of the basic pros and cons that are overarching this whole concept, I'd recommend checking that out because it has a couple of good nuggets. Specifically as it pertains to Roth 401k to Roth IRAs though, there's a bit more nuance to be aware of. And that nuance falls in line with the 5-year rules that pertain to Roth money. And for a background explainer on some of the 5-year seasoning rules, I'll link above to that video here. And then after you watch that video, I'll link above to some examples that walk someone through how those 5-year seasoning rules come into play. As a quick aside, please note that any Roth 401k or 403b to Roth IRA rollovers we do is actually an irrevocable move, meaning a pre-tax 401k or 403b to a pre-tax IRA can be reversed in the sense of doing an IRA to in-plan rollover. However, once money is moved into a Roth IRA, it cannot be moved back into the Roth 401k. And don't take it up with me, take it up with the IRS. I'll link below to their rollover chart so that you can verify for yourself what I'm talking about. Now, it's gonna help you to know how the Roth withdrawal ordering rules work, namely that any sort of money you're looking to take out of a Roth account first is gonna come from contributions, which is money you took out of your pocket and put into the Roth account. Then distributions are going to be considered having come from the conversions. So if you did like a pre-tax IRA or pre-tax 401k to Roth 401k or Roth IRA conversion, that's the second leg of any distributions that come out. Lastly, and the third one is from an ordering of operations standpoint, distributions will be considered coming from earnings once you've exhausted both your contributions and the conversions. Now there's two 5-year Roth seasoning rules. The first one applies to how to get access to Roth converted money and not pay taxes on those withdrawals. That's its own 5-year seasoning rule. There's another 5-year seasoning rule that pertains to how to withdraw the earnings portion of a Roth account without taxes. And that's going to be some of the focus for today's video. Now, you'll notice I didn't say anything about contributions being tax-free, and that's because any contributions you make to a Roth account are always going to be tax-free if you were to withdraw them. You will not get hit with any sort of 10% penalty tax. Your basis is always withdrawable without any sort of taxes. Now, I'm going to use the terms Roth 401k, Roth 403b, Roth 457b, all interchangeably, but please just know I'm talking about the same concept, which is moving money from a Roth employer-sponsored plan into a Roth IRA. There's two types of Roth 401k to Roth IRA rollovers, and those are either qualified rollovers or non-qualified rollovers. A qualified rollover is being done by someone who's over 59 and a half, who had that Roth 401k for at least 5 years. A non-qualified rollover is anything that doesn't meet those two definitions. If the Roth 401k to Roth IRA rollover is considered a qualified rollover, then the entire account will be considered a contribution from an ordering of operations standpoint when you go to take that money out of that Roth IRA. And as we know from discussing previously, any contributions you make into a Roth account are always withdrawable without 10% early withdrawal penalty taxes nor income taxes. And if you're thinking ahead, yeah, that means that there's no 5-year seasoning rule required for a Roth IRA if you move at least 5-year-old Roth 401k money into a newly established Roth IRA. You are considered seasoned into that Roth IRA based on how long you had that Roth 401k. And therefore, when you pull the money out of the Roth IRA, if it's the next day, that whole distribution comes out tax-free because you met the rules for a qualified rollover. You were over 59 and a half, and you had that Roth 401k open for at least 5 years. Of course, if after doing the rollover, earnings accumulate inside that Roth IRA, the earnings themselves will have their own qualified distribution rules. If you were to end up withdrawing all of that Roth IRA, the portion that's considered earnings is going to have its own rules. Namely, those rules are going to be the exact same. Was this account open for at least 5 years? And were you over 59 and a half? Well, we already established in this example, if it's a qualified distribution from a Roth 401k, then it's definitely because you're over 59 and a half. However, if you haven't had that Roth IRA open for at least 5 years, then any earnings that accumulate once the money gets moved in that Roth IRA, then those earnings are actually going to be considered income taxable, even if you're 80 years old. If you haven't had the Roth IRA open for at least 5 years, then those earnings are going to be considered income taxable. The only way around those earnings being considered income taxable is to have that Roth IRA open for at least 5 years. So, implied is if you're thinking about eventually taking money out of a Roth IRA in the future, it might make sense to get that Roth IRA established and get that clock ticking. So just one more time to hammer this point home, if you have a Roth 401k from a company you worked at for 40 years, and you've never opened up a Roth IRA, but now you are retired, and let's say you're 60 years old, you're over 59 and a half. If you go to do a Roth 401k to Roth IRA rollover, then you've already seasoned that Roth 401k money, so that rollover is considered a qualified rollover. Then if you were to take the money that you rolled over out of the Roth IRA for whatever reason the next day, all that money comes out completely tax-free. You're over 59 and a half, so no 10% penalty, and the money has seasoned inside the Roth 401k, therefore it's seasoned in the Roth IRA and you can withdraw it. It's considered a contribution in the Roth IRA and you can withdraw it, no taxes. However, if any money grew inside the Roth IRA after doing that conversion, the earnings themselves would need to wait another 5 years. Otherwise, you'll pay income taxes on the earnings portion if you were to withdraw that too. However, if I had that Roth IRA open for at least 5 years prior to making that rollover, then not only would it be considered a qualified distribution from Roth 401k to Roth IRA, but then on top of that, the Roth IRA could accumulate all the earnings it wants to, and I can withdraw that whole account tax-free because the earnings are seasoned because I had the account open for 5 years and I'm over 59 and a half. Okay, so what happens if I make a non-qualified Roth 401k to Roth IRA rollover? Well, again, that means I'm in violation of at least one of those two rules. I'm either not over 59 and a half and or I haven't had that Roth 401k open for at least 5 years. Well, the IRS says in this case that any money moved from the Roth 401k to the Roth IRA maintain their same character. Namely, any salary deferrals I took out of my pocket to fund the Roth 401k, that's going to map over as contributions. And then any earnings that accumulated inside the Roth 401k, that's going to map over as earnings once more. So going back to our previous example where the earnings hadn't been seasoned yet because that Roth IRA hadn't been open for 5 years, well, same problem here, and that problem is just exacerbated even further because a smaller portion of that rollover is going to be considered contributions or basis. A very small amount would be considered contributions, namely my salary deferrals, and then the rest would be considered earnings. That being said again, if my Roth IRA had been open for at least 5 years and I was over 59 and a half, then no matter how long I held that Roth 401k for, if I move that money into my Roth IRA, any earnings that have accumulated that were moved over or any earnings that accumulate since then will be completely tax-free because I had that Roth IRA open for at least 5 years. And in this example, I'm over 59 and a half. So from a calls to action standpoint, I would say if you're nearing retirement and looking to eventually move your Roth retirement account money into a Roth IRA, it might make sense to get that Roth IRA established sooner rather than later. Maybe you do a $1 Roth conversion, you just get the clock ticking. Otherwise, when you ultimately do that Roth 401k to Roth IRA rollover, whether it was a qualified or a non-qualified rollover, just know the rules that are implied if you don't let that Roth IRA season for at least 5 years. Don't distribute any of those earnings because the earnings will be considered income taxable, even if you're 80, 90, 100 years old. You have to let the Roth IRA season for at least 5 years. So hopefully that was helpful. If you have further questions, feel free to drop them in the comments below or get in touch with the website. We'll help you get squared away. Have an awesome rest of your week. We'll talk to you later. Bye.